If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about business and technology. In today's episode, we're going to be talking about the remarkable rise of NIO Stock and what the future could potentially hold. As a NIO bull and investor, a lot of you guys know this already, I'm pretty optimistic on the future for NIO. So this is going to be a super interesting, super insightful video. If you're new to the channel, make sure you hit the subscribe button, make sure you hit the like button, make sure you click the notification bell icon, leave a comment down below, share the video. All those things really do go a long way in helping out the channel. And so without further ado, let's get into today's episode. Let's start with the good news. NIO's seen an impressive recovery when it comes to deliveries, with over 57,000 vehicles delivered in Q2 alone. And we can't forget strong numbers for August with more than 20,000 units. This growth isn't just a flash in the pan, it signals that NIO is setting themselves up for a long-term recovery, and they're definitely back on track in my opinion. The Chinese government's recent stimulus have also provided a tailwind for NIO, boosting investor confidence plus stock prices. Plus, with a long-term margin target of 25%, NIO is making strides towards profitability in that regard. Another big factor, NIO's sub-brand Onvo. And this is where things get really exciting for NIO's future. Onvo's first model, the L60, is supposed to go head to head with Tesla's Model Y, and it's priced aggressively as well. This move could obviously supercharge NIO's market share, especially in the affordable EV segment where buyers are looking for good value without compromising on technology. What's interesting about Envo is that it's also going to be using NIO's battery as a service model. This model, as we've discussed several times on the channel, allows for buyers to lease the battery, resulting in a lower upfront cost of the vehicle, with the battery being about 30% of an electric vehicle's cost. For example, when you convert to US dollars, the Onvo L60 can be purchased for just around 21,000 US dollars. This makes it very attractive in price conscious consumer markets. I mean, imagine if you can, I live in the US, imagine getting a Tesla Model Y for $21,000. That's crazy. So it's a game changer, especially when you consider the efficiency, the spacious interior, and all of the technology features that this vehicle is coming with. It's not a watered down NIO, it's just a good product, to say the least. And Onvo's aiming high with a goal of 20,000 units delivered per month, which would put them in the same league as Tesla's Model Y and Li Auto's L6. But of course, it's not all smooth sailing for NIO. NIO still faces challenges, and as investors, we have to acknowledge them. One of their biggest concerns is cash burn. NIO has a net cash position of $433 million, but with a net loss of $705 million in Q2, the company is burning through around $600 million per quarter. That's something that investors are keeping a close eye on. Additionally, there's NIO's share-based retention program. While it's great for keeping employees around, it is leading to a little bit of shareholder dilution. That, combined with rising sales, marketing costs, especially with the launch of Onvo and their other sub-brand that's set to hit the market eventually, Firefly, that is something that could drag NIO's financial position down a little bit. But as I always say, investing is about a marathon. It's a marathon. It's a long-term game, not a sprint. While these short-term financial hurdles exist, NIO's path forward does look promising in my opinion. Analysts expect sales to reach $14.45 billion next year and a growth rate of 46%, but this sub-brand Onvo could help push those numbers even higher. The company is scaling production, improving its profit margins, and expanding its infrastructure, particularly through partnerships with brands like Sinopec, which has helped NIO establish a strong network of battery swapping stations across China. From my perspective, NIO's strategy with Onvo isn't just about growing volume. It's about positioning themselves as a dominant player in the global EV market. Onvo tapping into a broader audience with its affordable yet highly efficient vehicles, all while leveraging NIO's strengths like their Sky OS operating system and autonomous driving features, should be seen as a net positive for NIO as a whole. The L60, for example, the Onvo L60 offers a full range of navigation capabilities, putting it on par with Tesla's Model Y's offerings. As investors, we need to think about, where is NIO going to be in the next 5 years, not just the next 5 months. With more products in the pipeline, continued partnership, and an expanding customer base, NIO has the potential to surprise the market. Some analysts even see NIO stock price doubling in the long term, especially as they work their way towards reducing losses and scaling delivery. So where do I stand? Despite the skeptics, I'm bullish on NIO. Yes, there are short-term challenges, but the long-term vision is clear. NIO is building a brand, an ecosystem, and a future that positions them as a true global contender. The stock may have seen a steep rise recently, but I think that it's a prediction of what's to come with this ticker symbol. Thanks for tuning into Courtside Financial. This isn't financial advice, but just one NIO bull's perspective. So it's super important to do your own research and come to your own conclusions when thinking about these things. That's it for this one. I'll catch you guys in the next one. Thanks for watching.